I think our knowledge of the impact of what's going to happen with the commodities, given this so-called trade war, we're not in a position to guess, or we're not in a position to deal with that in the business today. I think there's too many moving parts, and what we've agreed to do is probably more focus on the opportunities that might come from this trade war and the result and or the impact thereof on commodities. So that's one. That said, though, we do believe that with gold, especially if you deal with the clients which is in the lower end of the cost curve, the silver clients, and I like to think short term, maybe even nickel. I think there's some runway left for those guys. Iron ore, we're not in a position to comment on that, but I do believe if we're close to those commodities and maybe copper in the short, medium term, we should be okay. That said, though, we can deal with it with the detail in a later slide. There's a later slide which explains our exposure into that. But our focus is going to be pretty much along those lines. Precious metals, in South Africa, maybe a bit of platinum work. We still like the copper story. Nickel short term, and then probably try and deal with the marketing people, our marketing team, to focus on those clients which is in the low end of the cost curve. Okay, so that's the one part. The other one is still, and again, there's a later slide which deal with that. I've just returned from a trip in South America dealing with most of our clients, the CEOs and COOs, and the issues is still pretty much the same. I think the one that we didn't pick up last year is the uncertainty, and for whatever good reason, the miners are holding back. I think some of the balance sheets aren't bad. I think from where they were 3, 4, 5 years ago, they're really not in a bad position. I think some of the gearing on the balance sheets is certainly, way down from what it was. But what we don't see is brownfield drilling. We don't see a lot of juniors out there, which ultimately become part of some of these majors. We don't see that. So exploration drilling. And if we talk about juniors, that's something for the medium long term could possibly impact on our business. By commodities, again, gold, although it was 29, I'm told our order book is going forward, this will drop down a bit, but we've always favored around about 30% for gold. Nicely up from 23 to here. I think if you look at the silver, gold, and put them in one box, we don't mind to have exposure in the 30s when it comes to that. Copper, our two main copper clients is Kamua, the Ivanhoe company in the DRC, and then Codelco, Chile, which I think both companies well positioned in terms of cost. So we're okay with copper. And then the nickel I think is going to increase in time to come. We've just been awarded a contract, Watches Bay, up in Canada, just north of $20 million, a huge nickel mine, open pit mine that's going underground, and it's about a 2.5 to 3 year project, and with potential more work. So that is one nickel project amongst others, which I think is going to add a lot of value.